I'm Greg Bonnell. Welcome to Market Call tonight. Our guest is David Burrows. He's the President and Chief Investment Strategist at Barometer Capital Management. Taking your questions on North American large caps. You want to give us a call? It is toll free, 1-855-326-6266. You can also email us at marketcall@bnnbloomberg.ca. Tweet us at Market Call. There are people watching the Twitters. I know some of you felt left out in the last little while. We'll keep an eye on it. David, welcome back to the program. Always great to have you here.
I'm glad to be here.
Let's talk about what we're seeing in this market right now. People are wondering. It's been a long time in this expansion. People have been making a lot of money in the stock market. That kind of thing makes some people nervous.
You know, it's interesting. All the way through this bull market, people have been nervous. And we know that bull markets don't die of old age. At some point, they die of excess, generally excess in the economy. And there's really been no excess built into this economy. People have not been, capital spending willy-nilly. It's been a very cautious expansion. But we believe that we're in the relatively early stages of a reflation in the economy. We saw interest rates fall from 1981 to 2016, where they hit 1,000-year lows in Europe. And I think that was a generational low. And the last time that happened was in 1947. Rates fell from the early 1900s to 1947. They hit about 1.5% in the U.S. on a 10-year bond. And when yields started to rise, after 35 years of stocks and bonds having roughly the same return, and we've had the same return from 1981 to 2016, stocks outperformed bonds 5-1 for the next 35 years. So when I started in the investment business, you learned you fight inflation by owning equities. And so equities could have a very long tail here because you can get rising dividend streams. And so there's no signs of recession on the horizon. I think that when we look at all the various factors that we look at, I think the market's very healthy. And the last piece is when the market makes a new high after not making a new high for over 6 months, it's happened 24 times since 1950, 250 trading days out or 1 year, the market was up 95.8% of the time, an average 13%, which is roughly double the average. So we see a pretty healthy market, and I think that there's some very clear sectoral themes we can take advantage of.
What do you think about the segment of the market that is clearly speculative, given the fact that people are paying a lot of money for marijuana names, and a lot of these names don't have any earnings yet? So clearly they're counting on something big to come down the road. Tilray today, I don't know if we can show an intraday for Tilray. What a ride. The stock almost doubled in value just in one session before it plunged, had several halts because of the frenzied activity, and I think it ended the day in positive territory, but I lost track of Tilray. What did you see there?
Well, I mean, clearly that's not investing, that's speculating, and you're going to get things that happen like this from time to time. I would be a little concerned if I was a big investor in marijuana stocks. I think there's a lot more interesting sectors to be invested in. But arguably, that could be a sector that has a fairly long tail on it, and for those that have a stomach for it, all power to you. But that's a bit of a wild ride for me.
Has it distorted the overall market as well with that, or is this so much interest and money flowing? Some days I look and the most actively traded stocks, at least in Toronto, are the big cannabis names.
Look, I think that that's the case in Canada because the Canadian stock market has been a relative underperformer versus markets around the world. So this is one area that people have been making money. I think for most serious investors, they don't have, a large portion of their money focused only in Canada. In the U.S., there's been plenty of really productive sectoral themes, long-term structural changes to take advantage of. But certainly, I think in the Canadian marketplace, that is the case. And, listen, some of these companies are going to succeed and they're going to be very successful or get bought. But there's going to be some, roadside wreckage also.
Yeah, you've seen wild rides before, but that one-day ride for Tilray, I had to check that one twice. We'll be back with David Burrows, President and Chief Investment Strategist of Barometer Capital Management, to answer your questions about North American large caps. So give us a call, toll-free, 1-855-326-6266.